Hello everyone, my name is Gregor Horvat and welcome to our new episode Surfing the Elliott Waves, where I will look at some of the most interesting developments for this week. This video has been brought to you by Orbex. I will give you a new update from last week when we also covered Euro dollar, Aussie and copper, gold, crude oil, and I will also today look at dollar Mexican peso and CAD versus Japanese yen. Now on euro dollar, as you know, we highlighted on a higher degree time frame chart that we are tracking and observing two interpretations. Now first one can be potential triangle here in the making if we will see prices remain bearish or sideways here in upcoming months, where this first scenario represents potential triangle in wave X, or maybe if we will rally and approach these January levels from the start of this year, then obviously this free wave rise could continue all the way back above these 2018 levels. For now, both of the wave counts are valid, and what's interesting when I merge both of the wave counts is that both suggest more upside in the near future. So either we are going to rally here for a wave B as part of a complex wave D that can take us towards, as you know, lower towards the lower side of the range, or maybe is this already a completed free wave drop for a wave 4 and we are going to see an impulsive rally for a wave 5. In either case, so we are actually expecting limited upside for a wave B, or maybe an impulse that can extend back to a new high for a wave 5. And if we look at an updated wave count here on the 4-hour chart, we can actually see very nice clean 5 waves down, which actually suggested that sooner or later we will see a reversal about we discussed in the past 2 weeks. So far we are seeing a very nice recovery here away from that fib levels just after the market spiked here below that wave A support and also moved close to this former wave 4. So overall it was a perfect area for a new turn to the upside, especially because, as I said, we have these 5 waves down. And now when we are breaking this trend line, well, it seems that market is ready to see more upside. As always, we try to focus on minimum expectations, meaning a free wave recovery whenever we are looking for a bullish reversal, because even if this current bullish reversal will later will be later shown as a counter trend movement and the market will move to the downside, well, even counter trend movement should be made by minimum free waves. So that's why I'm expecting more upside based on these minimum expectations. We can retrace all the way back to this ending point of wave 4 at 1.19 level. It's also round figure psychological level, which could somehow be important here as a resistance. So euro dollar, I think, can see more upside. Of course, any setbacks are welcome, and of course the first support would be at 1.1730. Now let's take a look also on Aussie dollar. Well, Aussie dollar is also recovering, which is quite interesting, as you know, because of lockdowns and economy in Australia is suffering. Of course, they are in a situation which appears to be like a new recession. However, this was already priced in. Aussie dollar has seen a very strong drop over the last few months since they went into this lockdown. So speculators, of course, were already positioned for this move. And now when we have, on the other hand, maybe approaching the final peaks of this COVID tests, COVID positive tests, yes, then of course we may expect that sooner or later we will step into the period where Aussie dollar will try to give us interpretation that is bottoming. Okay, and on the other hand, then you have these still mixed signals from the Fed, unclear situation about the tapering, but I think that next non-farm payrolls figures on Friday will definitely be very important indication whenever they are going to taper very soon, or maybe even they want to wait for a longer period. Still, here is COVID, very big deal if these cases will keep increasing over the next few months in the US and globally. I think that they may not taper so much as we think. They still may do it, but on the other hand, if they will not be any aggressive with the tapering, this means that speculators again could turn down on the US dollar. So again, you will then have Aussie dollar trying to pick up, but US dollar could actually be headed lower, and this could be very strong bullish case for Aussie. In fact, from an Elliott wave perspective, we see a very nice free wave drop here back to the area of previous consolidation, which was wave 2, and now we are recovering. Of course, 75.20 is very important bullish level, but again, if we're trying to focus on minimum expectations, you would expect a free wave rise, and I still think that this is the only first leg of a higher degree recovery that can take us higher. The only question is where this first leg will stop. It could be at this triangle pivot point here around 73.50. Also, what is important, as I said earlier, is copper. Now, copper is clearly looking impulsive here. I can very easily count 5 waves up. Maybe we are now going to slow down here at the former wave 4, but then a pullback and even more upside could be seen. Now, if we'll see pullback from here, this could definitely limit the upside for the Aussie as well. And then watch out for potential head and shoulders formation here. Also, if we zoom out a little bit, this appears to be like a free wave drop, definitely not impulsive from the high. So if that was a correction, then you know that there is a lot more upside potential on copper, which equals to Aussie strength. Now let's take a look also on gold. Now gold here is still sideways on a hard degree time frame chart. Now sideways price move represents a correction. It just opposed with an ongoing trend, just a healthy correction after these strong moves over the last few years. So this is totally normal. We are now in this retracement for more than a year or so, and I think that sooner or later this market again will attract some buyers after this consolidation will end. Ideally, that's a triangle here in the making. It's an ABCD pattern where wave D is approaching now the upper side of the range, so wave east here is still missing. Now wave D, obviously more upside here in the near term. Keep in mind that this is a 5 wave rise for a wave A, still only first leg of that wave D. So I think that upcoming pullback for a wave B, or even if you're a little bit more patient, for a wave E could be very interesting here, to trying to join the uptrend a little bit early and then trade the breakout. Okay, so for the short-term basis, maybe some more upside here towards 1830 level. Then you will hit this resistance from the previous triangle. So maybe time for a little bit of a pullback here. The support, the ideal one, would definitely be at the former lows here, swing lows of those corrections. 1774 towards 1784. That's the area where we would be looking for a new reversal higher. And now let's take a look also on crude oil. Now crude oil is definitely bullish. Okay, I'm not sure if we are now stepping into this wave B of some kind of an irregular formation, or maybe just a simple flat correction, because keep in mind that this first drop was very corrective here. So it can be wave A as part of that complex correction, or maybe it's already a whole completed movement. But that doesn't matter at this stage, because no matter how we look at this structure, at this drop from the highs, well, a move from the highs was in 7 swings. So even if current recovery is just temporary, it should be made in 3 waves, because this is the first leg of a minimum 3 wave recovery. So either you will see a break higher into wave C, or maybe even an extended wave 3 here. So watch out support this week for wave B, wave 2 at 67 down to $65 per barrel. That could be very interesting. Also, what I like here on this chart is looking firstly at the weekly. Well, you are here above this 150 and 200 moving averages, meaning this is a bullish trend. You are still RSI seeing a reversing back towards 50, which means that this is still an uptrend when you are above 50. Also, you have this very nice candlestick reversal pattern actually from last week. Okay, so this is a weekly candlestick formation. There was a very strong bearish week 2 weeks back, and then this was a very strong recovery, and this means that bulls are taking over the bears, meaning that current trend is bullish. Okay, as long as we are trading above that bottom here, I think that this market could see more upside. Also, when looking at the 4-hour chart, keep in mind that we crossed here this 150 moving averages. Now we slow down at 200, which is normally because we are also here at the former resistance levels. So what I would be expecting is potential pullback back towards this 50 period moving average in yellow, and then I would be expecting a rise. Also, if you look at this potential pattern also from head and shoulders perspective, it could be very interesting as well here. Okay, if we get this pullback from current levels towards lower prices, as I said, $66.50 per barrel could be very interesting potential support for this right shoulder. Okay, and now if this market is really going to see more upside after setback, well, then Mexican peso, I have it here, we'll see more weakness. I've been tracking and observing this triangle for a while. Okay, so it's an ABCDE pattern. Currently we are reversing down from the upper side of this triangle range after we spotted this free wave rise for the 61.8% of wave D. So ideally that's wave E going to complete the recovery. Now already we are seeing some very aggressive weakness breaking this lower trend line of this base channel. That's very important, because imagine this would be only a temporary drop here for from recent swing highs, and that would be your wave C. Well, in such case you would be expecting that market will bounce away from that same trend line from the lower side of the channel. But whenever we are seeing a break and acceleration through the same trend line, then obviously this should be very important signal that something else is going on, because bears are getting momentum here. Okay, they are becoming even stronger, and normally that represents or occurs in wave 3 of an impulse. So ideally we'll see more upside here this week, and any rallies I think later on, especially when we approach this 1980 level, could be just temporary before we get this final breakdown here into wave 5, which I think it can occur towards the end of the year. And now finally let's take a look on CAD-yen. Now CAD-yen is clearly making a corrective look here from the recent highs back to the area of a former wave 4. So very nice bounce away from 85.30 support. What I think that's very interesting is because we can clearly see here on the 4-hour time frame very sharp recovery, first leg of a minimum 3-wave structure that will take us higher, maybe even 5-wave advance. So watch out these pullbacks. The 38.2% is around 86.40. That would be first support all the way down to important 85.80, around 61.8%. So if we get a reversal here after this small gap from 2 weeks back, then of course this I think would be attractive support to see more upside while the market is trading above 84.63. Traders, thank you very much for your attention. I hope that you enjoyed this video. Talk to you soon. Bye.